All right. Our next talk should interest everybody in the room because the title of this talk is called Finding Your Strategy in Volatile Markets. And we all know what kind of markets we've been in recently. It's been up, it's been down. I don't think it can get any more volatile than it has been. And today, Jeff Gibby is going to be joining us from MetaStock. And a lot of you guys are familiar with MetaStock. And he's going to be telling us about how we can find that strategy today. Now, Jeff has over 26 years of experience at MetaStock, specializing in sales and business development. He leads the sales and business development teams focused on creating global partnerships and distributors. He manages new products and service offerings for MetaStock and collaborates with training companies to educate traders on the power of MetaStock. And that's what he'll be doing here today. He's an experienced speaker and trainer, conducting workshops and training sessions worldwide on software usage and trading in diverse markets. And I'll tell you, up until about a month ago, I'd only met Jeff through like a Zoom cameras and things like that. And then I met him in person. And the first thing I said to him was, I thought you were much shorter. And I was like, I don't know if you remember or not, Jeff, but I was like, well, you're tall. You're like, yeah. And I'm like, I don't know. You just look shorter on camera.
Yeah. I'm not that tall. I don't want to I'm like 5'9". So just, I'm not like 8 feet tall or something, but yeah. Anyway.
I think you always have your camera with so much headroom that I just assumed you were like a really, really small guy. And then I saw you and I was like, oh, you're just normal.
All right, cool. Should I just take over?
We'll turn off our cameras. We'll mute everything and it's all you.
Okay. Let me know if you have problems seeing my screen. I'm going to go ahead and share the entire screen. And you should see a chart of Tesla right now. And I'm going to go into a slideshow. Can you see that also?
Yes, sir.
All right, cool. So we're good. Good. Let's go ahead and do this. Welcome. Thank you, John, for having me. It's good to be here. I hope you're doing well. I love summer. I hope you're enjoying your summer. I think there was a comedian one time that said you only have so many summers in your lifetime, so you better make sure you enjoy them. And so we'll start with that, I guess. Good morning, though. Thanks for the introduction. Thank you for having me. Thanks for coming. I'm also going to read out loud a legal disclaimer real quick. And got it memorized. Today's demonstration is designed to instruct you on using MetaStock, the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Now, give me just a second. I'm not terribly familiar with Zoom, but all my questions and my chat box just went away, and that's okay. I found it. Okay, cool. Now, if you have a question, feel free to ask it. I'll be able to answer it. I'll be able to see it, and all that kind of good stuff. So, in any case, as John said, I started here at MetaStock. It's 26 years ago now. And I think we're going on 27 now. And it's been a great company to work for. I absolutely love it. And I'm not going to talk a lot about me because you don't care too much about that. I started in inside sales, which means if you had questions about the software for 10 years, I'd be one of the people you might call and talk to. After that, I've worked with lots of people in the industry. We've created a lot of methodologies with some of some of the best technicians out there to kind of create scans and methods for them. And then for the last 10 years, I do a lot of our conferences. Like I put on, I organize a lot of the events that we do. I'm in charge of our sales team, and I'm kind of also in charge of a lot of the products we design. So I will say this about MetaStock. I feel really, really grateful to work for MetaStock. It's been a great opportunity for me. I started here, I didn't even know what a stock was, and now I trade very, very regularly, and I've had a chance to literally meet somewhat of what I feel are kind of the best minds in the industry. So there you go. Hopefully you read that because I'm not going to talk about that too much. The one thing I'm going to say before we kind of dive into kind of what I have my prepared talk today is we're very, very proud of this. Every year, the Stocks and Commodities magazine company, what they'll do is they'll actually go out and they'll ask people, what's your best software? What's your favorite software? And for 30 years in a row, MetaStock's actually been rated #1 in its price category. And I think there's a lot of reasons for that. We have a lot of different markets that are available. You can use this regardless of where you're from. We get a lot of customers from India and Australia and London, and Europe, and Middle East, and we can cover just about any market on earth. So if you're in a different market and you want to trade stocks, everything I show you today, although we'll probably talk about stocks you're interested in, everything that we show today can be used on currencies or foreign exchange or commodities or stocks or European instruments. In fact, like 300 exchanges is about the number of exchanges that we cover with Refinitiv. So no matter what we're talking about, we'll be able to. So I'm very, very proud of that. 30 years in a row, it's been rated #1. And I always kind of start with that. So we're today, here's what I want to talk to you about, though. Here's kind of like what I've got planned. I'm going to talk to you a little bit about the importance of a trading plan. So we're going to talk a little bit about that. I think it's important that when you trade like a business. You're not going to go into business without a trading plan. And by having a trading plan, you should know kind of like, if you're starting a business, you're going to know what your product is. You're going to know what your overhead is. You're going to know what your costs are, all of that kind of thing. It amazes me, people that jump into the market and they have no idea. Okay, well, I'm just going to buy. Uncle Joe told me I should buy. I'm going to go ahead and do that. No, I think it's important to have a trading plan, have an understanding of your business and what you're going to do. To show you how simple a trading plan can be, I'm going to talk a lot about MACD today. Kind of explain to you how it's calculated, how to use it, give you 3 different common uses for MACD. Then we're going to talk about testing and finding opportunities in the marketplace. So there you go. Let's go ahead and kind of get started. What I'm going to say here is this is Richard Dennis. Richard Dennis was named Prince of the Pit. That's his nickname. I don't have the exact year. I sometimes write it down. I didn't this morning. But he is regarded as one of, he was called Prince of the Pit. He took $5,000 that I believe, according to the story, he borrowed from his family and turned it into over $1 million. And very, very famous futures trader. He personally believed that he could teach anybody how to trade. Like he could go in and kind of teach their methodologies. And he had a buddy by the name of Bill Eckhart, who disagreed with that as something that could be done. So what they decided to do is actually test that. And what they came up with is they actually put ads out in Barron's, Investors Business Daily, and a couple of other places. And they recruited some traders, and they brought in some traders. They interviewed people, and they brought in a group of, I can't remember the exact number. There is a pretty interesting article on Wikipedia. If you just look for Richard Dennis, it'll fill in some of the blanks on this. But what they did is they brought some people in. They taught them basically a breakout method. The turtle trader method is a breakout method. And then they basically had them implement that trading methodology. And the result of it wasn't success at all. It was extreme success. They had grossed like over, well, let's see, I think I have it right here. Maybe I don't. This is grossed over $175 million in about 5 years, just teaching people how to trade. And I love this quote particularly. I always say you could publish the rules that I used in a newspaper and nobody would follow them. The key to trading is consistency and discipline. I thought that was great because, with MetaStock, we deal a lot about different trading rules and trading styles, where I'm going to talk to you a little about what I like to look for in a trading rule or style. But one of the other quote that he had that I don't have in this PowerPoint is, I always also said, our rules weren't the best out there. You could probably create better rules than the ones that we had. Again, the key to trading, though, is consistency. So with that in mind, I want you guys to answer a question. What do you think is the best profession for trading? Okay, and I got some answers here. I was going to put circus clown on here, but I didn't. And it's not the right answer. But according to this, what do you think is the best profession for trading? Is it a teacher, an engineer, a psychologist, or a psychiatrist, or an airline pilot? So Marie's saying C, Brock is saying C and D, Jake is saying psychologist. Actually, I think psychologist is an interesting answer. Don says all of the above. B. Okay, we're getting some good answers here. I think psychologist is an interesting answer because there's a gentleman, there's actually a couple of really good technicians that I've had the pleasure of working with in my 26 years here at MetaStock. One is a gentleman by the name of Dr. Alexander Elder, who wrote a book called Come Into My Trading Room. And another book the name escapes me right now, but very, very good technician. And he was a psychologist. Another person that I have a lot of respect for and the pleasure of knowing is Jake Bernstein. And he's also started as a psychiatrist. So I believe there is actually some truth to that. The actual answer is airline pilot. And I think it's interesting, like we did a lot of work with Greg Morris several years ago. He managed something like $93 billion with stadium money management. He wrote a book on candlesticks, very retired. He comes in the office every year, but he was an airline pilot. And same with Chuck Hughes. So the correct answer that I'm looking at, Marie, is correct. D. So if you answered airline pilot, according to the magazine that I based this question on, it was airline pilot. And Marie, you're absolutely right. It's because of the check, because they have a very disciplined approach to trade. So when an airline pilot takes off, they have they're going to do this. They're going to check their landing gears. They're going to, maybe that's not part of the checklist. I'm not a pilot. But they have a very specific, disciplined approach to exactly. Same thing if something goes wrong, same thing as if they land. It's a very, very disciplined approach. So thank you for all the answers. They can stick to a flight plan. Absolutely. Don, yes, Chuck Hughes. Although I like Chuck Hughes too. So anyway, so there you go. There's the answer there. Let me see. I'm going to ask one more question, and just to see if you can guess who this gentleman is. Famous technician, wrote a very popular indicator that we're talking about next, called the MACD. His name is, I'm just going to go ahead and say it, Gerald Appel. So Gerald Appel created the MACD. And the reason I want to kind of be clear about why I talk about the MACD, there's a few reasons that I selected the MACD and kind of talk about it. A lot of people use MACD, but it's surprising to me how many people don't use MACD. Or how many people use MACD, but they don't really know kind of the construction. Two, it's very popular. It's one of our most popular is using the MACD, one of the most popular videos on our YouTube channel, so people really do like the MACD. And three, well, those are the reasons. I do want to say that it's definitely not my favorite indicator. We're definitely going to test it to kind of compare it to some other ones. But what I want to do is kind of just talk about how it's constructed, that kind of stuff. So to do that, I think this is the last screen I have here. Let me see if I have another one. I will say that it is a trend and a momentum. So it's designed to measure the trend, and it's designed to measure momentum in the trade. And we'll talk a little bit more about that, and I'm sure people have talked about how the trend is your friend until the bend, rising tide lifts all boats. So what MACD is looking to do is two things. Well, there's three things that I'm going to teach about how you can use MACD, but trend and momentum are kind of among the biggest. So what is your favorite indicator? Oh boy. So there's a couple methods that I really, really like, but I don't have necessarily, I wouldn't say a favorite. Actually, if I had to say there's one indicator that I use on every single chart, it's going to be the 20-period simple moving average. So there you go. And I like to look at it to kind of identify stuff. So if I have to choose a favorite, there you go. Okay, so let's go ahead and kind of talk a little bit about MACD. And what I'm going to do is I'm basically going to kind of just go into MetaStock. Do you guys have a stock that you want to look at? I've got Tesla up here. We can look at any stock that you want. If you have a symbol, hurry and type it in because I meant to do this a second ago. But what symbol do you want to look at? And we can look at that. While we do that, I'm going to talk a little bit about well, I'm just going to wait for stock real quick. So Gerald Appel developed the MACD, and I think we'll just go with Tesla for now. We will be using some symbols in a minute to kind of do some testing with. So if you have some symbols you want to look at, let me know. But Gerald Appel developed the MACD, And I think it's important to understand that when he did, I'm going to go ahead and kind of put in a MACD histogram right here. This is MetaStock. As I said, I have Tesla open. What I'm going to do is I'm going to just add MACD to the chart. So right here, this is what we, in MetaStock, we call this our indicator quick list. And there's literally several hundred indicators that are in here, okay? What I'm going to do is I'm going to find the MACD histogram on this list. I'm going to go ahead and drag it and drop it on the chart, okay? And with the histogram, that's going to display basically 3 lines. We go ahead and do that real quick. And what I'm going to do is I'm actually going to make things a little bit thicker. I'm personally actually very blind in both eyes. Like it's a good thing contacts exist, because otherwise I would be disabled, literally. But I'm going to make things a little bit visible, more thicker for you, just because it makes them a little bit easier to see it. So I'm going to go ahead and kind of thicken up everything quite a bit. And so that way we can cut it. Now, to calculate the MACD, the first thing that I want to talk about is this red line is the MACD line, okay? If I was to tell you how to calculate it, the way Gerald Appel calculates it is he takes a fractional MACD value, like I think it's 0.16 and 0.75. Those numbers could be wrong. And he takes fractional exponential moving averages. Now, those match up pretty closely to the 12 and 26 moving averages. So I'm going to go ahead and add those to the chart as well. So let's go ahead and do that. I'm going to go ahead and scroll down here. I'm going to grab moving average. What I'm going to do is I'm just going to drag this onto the chart. And I'm going to put a 12 period exponential moving average based on the close. And I'm going to do a 26 period exponential moving average on the close. Okay, we'll go ahead and click on OK. I'm going to actually make this color a little bit different. So if I refer to it, I can refer to it as the red moving average and the blue moving average. That just makes it easier for me. So right here, we've got the MACD, which is the red line. If I wanted to calculate the MACD, if I want to tell you how you could calculate the MACD value, the value of this red line, what we're going to do is we're going to take a shorter term moving average, the blue moving average right here. We're going to subtract it from a longer term moving average, which is the red moving average. Okay, and that's it. So if we get the value of this, when we look at the value of MACD, we're looking at the comparison of a shorter term moving average to a longer term moving average. It's that simple. Okay, so that does tell me a few things. Like if we're in a downward trend, like right here, we're in a pretty good downtrend. Went down about 66%. If we're in a downtrend, what's going to happen is your shorter term moving average is going to go dip down below your longer term moving average, which is going to cause your MACD to be negative. So you can already tell that this stock is going down because the MACD is negative. Okay. If we start to go up, okay, like we do here, you're going to, there's eventually going to be a crossover, which is going to give you a positive value on your MACD. But you'll also, what's also going to happen is you're going to have the shorter term moving average go above your longer term moving average, and your difference is positive. So that's how you can kind of look at it to identify the trend. If the trend's very flat, let's just call this area of the chart a little bit of a flatter area, you're going to have shallower MACD. So it also is a good way to look at it as well. Okay, so that's it though. That's what you're looking at when you look at the red line here. I point at my screen by habit. You can't see it. Let me use my mouse. You can look at the red line, but if you understand that you're just looking at 2 moving averages, basically the difference of those is going to basically be reflected, or the MACD. And if the MACD is dropping fast, that means the price is dropping. If it's going up fast, it means the price is rising fast. And if it's really flat, like it's been here for a little bit, at least comparatively, then we're going to know that we're in a flat zone. So that's it. That's for the MACD. That's what you're looking at. 2 moving averages, the difference between them. Okay, I'm going to clean up this chart just a little bit. Okay, just clean some stuff off of it. Now, the second part of it, this is the blue line. Okay, and Gerald Appel called this the signal line, and quite simply, it's a 9-period exponential moving average of the red line. That's all. So he calls it the signal line because if the MACD crosses above its signal line, as it does right here, the stock goes into a bullish phase. So let me go ahead and put that on the chart. Right here, you see that the red line crossed up above the blue line, or the signal line, the MACD went from a bearish zone to a bullish zone there. Okay. When it crosses back down, which happened right here, there's that cross down below the signal line. Oops, drawn more lines than I mean to. Then that's going to be a bearish cross event. That means the MACD is going into a bearish zone. Okay, and I could draw that on the chart. If you're using the MACD for trend analysis, when it goes into a bullish phase, when it crosses up above that bullish threshold or that bullish trigger line, you could actually buy this. Okay. Likewise, if it gets bearish, you expect the price to kind of go sideways or at least go down, then you could sell that stock. Okay. And what we have in MetaStock to kind of help you understand exactly where that happens is what's called an expert advisor. And so what I'm going to do here is I'm going to actually go in here. I'm going to click on our expert advisor. And there's several, I think there's like a couple hundred built-in things. Like we can go, I could apply one that would show you all the candlestick signals that exist on this chart. It's really, really cool. But what I'm going to do is I'm going to come down to this MACD here. Okay, MACD by MetaStock. I go ahead and attach it. And what's going to happen is when the crossover happens, it's going to annotate the bullish zone here for you. When the crossover happens to the short side, it's going to give you the sell zone. And you can also see the trend of the MACD because it's putting the trend ribbon right here for you. So here you've got it in a bullish zone. Here you've got it in a bearish zone. Bullish, bearish, bullish. Okay. This also leads into one of the reasons I like it. I'll talk a little bit more about that before I kind of move on to the second way you can use MACD. But one of the things I like about technical analysis is I'm not trying to guess what Ford pulling out of the EV market is going to do. Or like, not, I said that completely wrong. I wouldn't say that they're pulling out of the EV market. They're having some challenges with their launch of their F-150 Lightnings. And Chevy just pulled the most popular brand off of the Bolt off of the market. They pulled the Volt off of the market a couple of years ago. But we're not looking at that. What we're looking at is we're looking at the trend. So we can make our assessments about what Tesla is doing based on kind of like its competitors and stuff like that, what interest rates are doing, whether it's going to be harder to sell the cars, whether people are going to buy cars because they're printing money again, whatever. Like, we're not looking at those fundamentals. What we're looking at is we're studying with technical analysis price movement. And the methods that I really, really like are the ones that are more objective. And what I mean by that is if I explain to you what the crossovers are, we can all look at the same chart and come to the same decision that here we're doing a MACD buy signal because we've actually got, you don't even need MetaStock for that. It'll just tell you, you just need to look at the chart and it's going to give you an idea. Now, it doesn't mean it works all the time, but we can kind of see if it works or not. We can kind of test it. We can see how well our business plan is going to work based on using it. So kind of getting off onto a little bit of a tangent and getting a little bit ahead of myself. But for now, one method that you can use for looking at MACD is, are we in a bullish zone or are we in a bearish zone? And we can make trading decisions based on it. And that's just a comparison of MACD to us. Okay. There's two more methods that I want to teach you or kind of talk to you a little bit about MACD. And we'll kind of talk about comparing different methodologies. So the second method is you can look for it as an overbought or oversold indicator. So, and that's just kind of a reversion to the mean type of an idea. And for this, what I'm going to do is I'm actually going to change my color of my charts just a little bit so the highlights stand out a little bit. I'm just going to make them black and white. I'll go ahead and click OK. And then that way I can kind of see where the MACD starts to get overbought and overextended. Okay. And this is a reversion of the mean type of a thing when we start to see a stock go too far too fast. You'll start to see a MACD overbought or oversold reading. So right here, where you see all these bars start to paint red, what it's warning you is that the MACD is entering into an overbought region and might pull back to the mean. Now, you can see that here where it's happening. It's happening here on the hard right edge of the chart. It's also happening here. Now, one of the things, and I like the way we kind of worded this, I'm going to show you the exact way we word this type of a warning on the chart. But one of the things that is, if you've been trading for a while, is just because something becomes overbought or oversold does not mean it's going to revert to the mean. Okay. Stock, there's a saying out there. Can't remember who said it, but I loved it. a stock can stay irrational for longer than you can stay. I can't even remember liquid. In other words, like stocks can trend. They'll trend for a really, really long time. We've been in a very sideways market, but right before that sideways market, we had a tremendous bull run. And before that, we had another tremendous bull run. So I would not recommend that you primarily just use overbought, oversold readings. But if I'm looking at Tesla today as maybe a potential entry signal, I am getting a bit of an overbought, oversold. So if I'm in Tesla because I bought it here, I might start to play a little bit more defensively. I might move my stops up. But here's the way it works. What I'm going to do is I'm going to look at this in a commentary window. I'm going to go to the View Expert Commentary. And when I do that, right here, notice that there's a red triangle. This is going to tell us about MACD, okay? And I'm going to go ahead and kind of pop this over here to the window here. It's looking at this day. I can also move this to other days. So right now, it's going to kind of analyze Tesla today, okay? The MACD can provide buy-sell indications in 3 ways. These are the 3 I'm teaching you about. Crossovers right now. The MACD, I can make this bigger for you too. You can read along in your book. Currently, the MACD is bullish because it's trading above its signal line. It went bullish here, okay? Since the MACD crossed above its signal line 23 periods ago, MACD price has increased 40% and has ranged from 23%, 233 to 160. So we got a great signal here. Right now, we're up about exactly 36.66%, okay? The MACD now is in an overbought range. Prices may continue to move higher for some time. In other words, just because it's overbought doesn't mean it's gonna instantly correct. Look right here where it became oversold. It was oversold for a really long time before it even showed any signs of actually kind of turning around. So you should wait for prices to move lower before considering any short positions. Again, if you're in a long trade because of this and you see MACD being overbought or oversold, you might want to get more defensive about where your stops are and where your placements are. But you will want to wait for a confirmation that Tesla's done with its upward move before you do that. And then the third thing, so that's the second thing. Are we overbought or oversold? MACD can tell you that. The third way that people use MACD is they use it to measure divergence. And one of the things that I'm going to kind of talk a lot about divergence right now, but one of the things that has stuck with me is we do a lot of webinars with a gentleman, I mentioned his name earlier, called Dr. Alexander Elder. And he is, he calls MACD the most powerful signal in all of technical. So I'm going to kind of do my best to kind of explain to you what it is. I actually think we might have one right here on the chart. When Dr. Alexander Elder is looking for MACD divergence, one of the things that he wants to look for is a peak in MACD and another peak in MACD with a cross below the 0 line. You can reverse this too. If you're looking for a bearish divergence, you look for troughs in MACD with a cross above the 0 line. So I'm going to kind of zoom out just a little bit, okay? And what I'm going to do here is like, here is a big peak in MACD. I'm going to kind of draw a line right here, okay? I'm going to draw it, goes down below 0, okay? So that fits his second criteria. And then it comes up above 0, okay? And the difference between this peak in MACD is about 6%. MetaStock's new charting will tell you exactly how many periods that is. If I look to a corresponding peak in price, here we had a MACD, or here we had a peak in price, here we had a peak in price, and measure that out, this line is going up, and this line is going down. That's not the same direction, okay? And in this particular case, this is actually a pretty good example of divergence. I've seen better examples of divergence, but you very clearly have a line that's going up here, going up about 6%, and one that's dropped about 31%. You're making a peak in MACD, but you're failing to make a peak in price. That's a divergence. It's bearish divergence. And then the price did go down. So that's the third way you can use MACD, is to look for those types of divergences. Let me go ahead and click on escape. Let's delete those lines. And that's the other thing that the MACD will look at. So that expert advisor, I'll go ahead and click back into that commentary. That expert advisor, the last thing it says, again, we're looking at this day right here, there have been no divergent signals within the last 5 days. So if it sees that type of a divergence, and it is there. We have some comments from Don. Don says this means it's a lagging indicator. Yes, you're using 3 moving averages. There's no question that MACD is a lagging indicator. It definitely is. It gives one a history to read, takes a lot of time and a lot of info. I'm not really sure what to say there. Is it MACD best at with huge volume? Well, that's one of the things that, thank you, Don. There's a lot of comments. I'm sorry I didn't see them up until now, but yes, for sure, it's a lagging indicator. You're looking at 2 moving averages and applying an average to it. So MACD is definitely a thing. He says, isn't MACD best with huge volume? So can you use volume? I think the way that you're saying that is, can you use volume to confirm that? You certainly could look at volume and say, okay, well, I'm getting a MACD buy signal here. Am I going to look for a volume confirmation? Do I want volume to be bigger than average? You certainly could architect a system around that. And I like the way you think. If you wanted to kind of add something to that, to say, okay, well, I want a MACD buy signal, and I want volume to be bigger on that day. Actually, MetaStock's a great toolbox to help you allow you to test those types of scenarios to see how it works. Does it work best with blue chip stocks? You could actually test it against all of the blue chip stocks. So, Don, you're asking a bunch of really good questions. I appreciate it, because they kind of feed into kind of like what I want to talk about. And I'm going to look at the time, and I'm going to see that I'm actually behind on time. I spent 37 minutes talking about MACD and explaining MACD. I hope it was helpful, I guess. But one of the things about technical analysis is it's been around for a really long time, right? Do I care if I want to trade Tesla? Also works well with Heiken Ashi. If I want to trade Tesla, do I care about MACD if it doesn't work well historically? And that's the thing I like about technical analysis. I know if I sold here and bought here, I can see that on the chart. It's just drawn for me. I'd say that was a good trade. If I bought here and sold here, that was a bad trade. If I sold here and bought here, that was okay, bad. I can get a very objective view of how this works against Tesla. I can come in here and I can say, okay, well, out of these trades, this is how many profit. One of the questions that I got from traders all the time, and I worked with traders day in and day out, talking to them about what they felt they could do better, how their methods were working for them, what they wanted to be able to do. But there are literally, even just in MetaStock, there's Heiken Ashi, there's 9 different charting styles, there's 200 plus indicators, there's 101 different methodologies. If I'm just looking to find a method that works well, and my main interest is blue chip stocks or Tesla, I'm not really concerned about MACD unless it's a method that I know works well. Okay, and so I can go in and figure that out. But the other thing that I can do is I can actually come in here and do what we call a system test, where I can say to the software, okay, take MACD, test it out, tell me how well it worked on tests. So somebody had asked for Tesla, Goldman Sachs before when I was asking for symbols. If you have more symbols, let me go ahead and kind of come in here and we'll do a bit of a back test, okay? And with the back testing engine that I have, I could take all the blue chip stocks and say, how well does MACD work with it? But what I'm going to do here is I'm going to take a few stocks and test them against a whole bunch of different methodologies. And the idea is I'm going to, as a new trader, focus my education on learning about MACD if it's helpful, okay? I'm only concerned about MACD if it's something that's going to be really helpful for the stocks that I'm interested in. Does that make sense? Okay, so let's go ahead. I'm going to skip a few tools here. We've got the quote center, we've got the scanner. I'll come back to that in a second, but I'm going to go to the system tester. And what I'm going to do is we're going to type in a few symbols. Now, I am really biased. I think MetaStock is one of the great software programs out there. It has objectively been rated the best software in its price category for 30 years. But one of the things I like about our system tester is I can come in here and I can test whole baskets of securities against whole baskets of stocks. And I can really go back with the data that we get from Refinitiv and go back to the 1980s and test any type of a market that I want. Really, really get a specific. What I'm going to do right now is we'll go ahead and type in Tesla because we've been talking about Tesla. We're going to do get Goldman Sachs because somebody asked about Goldman Sachs when I was soliciting symbols earlier. We'll go ahead and also put in Apple. and maybe just like a market ETF, like SPY ETF, and then the DIA ETF. Okay. And now what I'm going to do, do I have a favorites list here? I do not. Okay. What I'm going to do is I'm actually going to select some systems that are pre-built in MetaStock already. So I'm going to go ahead and grab these ACT ones. These ACT systems were worked based on the work of John Ehlers. He wrote Rocket Science for Trading. They're just included in MetaStock. I'm going to come down here and find that MACD by MetaStock because I should include that. We were talking about it. Okay. And then I'm going to actually do a real quick search here. And I'm going to find what we call the performance systems. And these are just a basket of a whole bunch of systems. Select out right here that I know are also included in MetaStock. So be really, really careful here to make sure that I include only systems that are actually included in the base package of MetaStock. Because as a trader, if you want to do, okay, if I add this criteria to my trade and you want to test it, like the MACD with the volume as a great example, you can. But I want to show you systems that I know for a fact are included in MetaStock and only do stuff right out of the box. So I've chosen, as part of this, I've got about 88 systems that are, okay? I'm going to test those against 1, 2, 3, 4, 5 stocks. So 400 tests, roughly. I'm going to take long trades and short trades. So I'm going to do 500, and I'm going to trade 500 records back. So this is a daily test. See the daily right there. That means every time it's going to go back about 2 years, about 500 daily bars, and it's going to take every single buy and sell signal. Okay. For the trade options, I'm going to show you this real quick because I am going to end on time today, just to be nice. Just to kind of show you this really quickly, I'm going to start with $10,000. For my percentage of available equity, when it gets a trade, it's going to take 75%. The options are number of units, transaction cost, percent of available equity. What that means, I'm not going to pay anything for brokerage. I'm going to use realistic market prices. So in a nutshell, what that means, I'm going to go ahead and start the simulation. The first trade it always takes is going to be 75% of it, the $10,000. So as it tests these methodologies, the first trade will always be 75%. But every trade is going to be 75%. Every time it gets a buy signal, it's going to buy 75% of its equity. Every time it gets a sell signal, it's going to be 75%. Okay. The other thing is that when it does a test and it's done, actually I'm going to click on view results before it goes away, is it's going to wait until the close of the bar and buy the open of the next bar. We call that realistic market prices. Okay. So, and then I think that's good. I think that kind of gives you a good idea of kind of how things are running. I didn't put any brokerage or commission costs because I don't pay any direct commissions to trade. And so, but you can include those if you, okay. What I'm going to do here is I'm going to go ahead and basically, these are the results of those systems that we tested, okay? Red lines are bad. They mean that the system overall lost money, and the green lines are good, okay? So if I, as a trader, I'm looking to say, okay, well, what kind of indicators or what kind of methodologies work? Well, I have 2 years of data because I told it to go back about 2 years of data. And then I can tell you that the CMO reversal was the best performing method over the last 2 years, okay? Now, there's a whole CFTC risk disclosure that talks about how backtesting is simulated, and it doesn't mean that the next year you're going to get 34%. And I will absolutely agree with that. But if I'm looking to focus my education on indicators that work, I'm going to be more interested in methods that are on this side of the spectrum as opposed to methods that didn't work. Why do I want to spend time learning about methods that didn't work on the stocks I'm interested in? Okay. So that's kind of, I think that by testing over the years, certainly by testing data, kind of figuring out what works for different instruments, it helps you put the odds in your favor. Okay. And I've never ran a back test and then followed it by trading for the next year and got exactly the same results. That's not going to happen. But I do believe if you're looking to kind of shortcut your education process, this is a really good way to do it. Okay, so the CMO reversal system made about 34% last year on average. Remember, I did about 5 stocks, so these are average numbers. Its best performance was $7,800. Worst performance was $200. Way too many trades. 2 years, 228 trades. It's like 11 trades a month I'm going to say roughly, right? 10 would be 240. So it's about 10 trades a month on each single security. And that's where kind of finding the right fit for you kind of goes into play. I don't have that kind of time as somebody that works and does a lot of demos. I like to trade. I usually try and trade about 15 minutes of the day from about 1:45 to about 2 p.m. Right. So what I want to do is I want to find stuff where I'm not quite working that hard. Okay. And so the next one, the CCI moving average, actually looks a lot better to me. 11 trades. It had a 31% instead of a 34, but it only traded about 11 times, which is a trade every other month or so. Okay. You had that Mama Fama, which was 29%, but I think you get the idea. Okay. Now, one of the things I would say is I do not recommend that you take the best performing system and start trading with. Okay. The thing that I really like about trading is you can paper trade, you can look at the trades, you can back test. And then even then, when you're starting to do something new, Vince Vora, a good friend of mine and another great technician, always likes to say, trade with the money that you can afford to lose. And I'd also say, I'd add to that, start small. So if you're doing something that's a little bit different, you can always start with a really small position and see how that goes, and then kind of paper trade. For me as a trader, one of the biggest lessons that I think Vince helped me learn this, is I don't want to be trading in such a way that I'm going to be over leveraged or overhyped. Robert Deal said it this way. He said there's old traders and bold traders, but there's not old bold traders. I like trading to be as unsexy as possible. I don't need the emotion of that. So looking at the time, I'm going to kind of wrap up a little bit and kind of go into the report. I can't really get on a soapbox right now. Here's how it performed against those 5 securities. You can see every single one of them worked well, was profitable. The best performing out of that group of 5, and I could do 500, I could do 5,000 stocks, but the best performing was Goldman Sachs, followed by Tesla. But all of them performed well over the last 2 years. And I'd say the last 2 years were pretty challenging years to kind of get a return on. So the fact that they worked really well in this market, or this system worked really well in that market. There's a whole report here. I'm going to go ahead and click a view on it, and we can look at the Goldman Sachs report. This would have made about a 51% return versus buy and hold. Buy and hold would have got you minus 8%. So we outperformed buy and hold. It's not as important to me. These are, though, profit and loss index goes from minus 100 to plus 100. 97 is really good. Risk reward measures your open position drawdowns against your open position reward. And that's also 95%. That's also pretty good. There's other things that I like to look in here very quickly. You've got your total number of trades. 4 profitable trades going long on the security, 3 going short. 7 total trades compared to 2 unprofitable trades. 1 and 1, 1 going long and 1 going short for unprofitable. We did have 2 in a row, most consecutive, and our average loss was $60 compared to our average gain of 700. So it kind of gives me a good idea. The other thing I really like to look at is this equity graph. I'm going to plot that on the chart real quick. Here you go. It didn't take a trade for a really long time. This whole flat space is where it wasn't getting a trade. Here's where it got its first trade. And I'd say that's a fairly consistent equity curve. Okay. I like it from a glance. Let me go ahead and plot it on the chart. And you can see that equity curve come in. Let me go ahead. I'm going to leave the expert advisor on here. Go ahead and close this out. You can see go ahead and close the MACD out here, just kind of clean it up a little bit. You can see here's where your first trade would have been. Here's where your second, third. So it's going to label those on the chart. If I look at this and I like it, the next thing I'm going to do is I want to understand what kind of feeds into the system. So if I want to learn that, I go back into the expert advisor. This was the CCI moving average system. I'm going to go ahead and go to PS right here. I'll attach that method to the thing. I think it's the same one. And then we're going to get that same commentary that we looked at before. So I could come in here, and it's going to be analyzing the very end bar here, as it always does. I'm going to zoom in a little bit. Okay. On our we're just actually getting a long signal on this, not a recommendation to buy, But so this is actually a good example. If we're trading short on positions, we'd exit our short positions. We'd look to buy either a market on close or tomorrow's open. Okay. This system combines 3 different methods into one trading system. It uses a 34-period CCI, a 200-period stochastic of the CCI, and a 9-period moving average of the stochastic as a signal. So I already know exactly what 3 indicators I'm going to be learning about as something that works well on Goldman Sachs, right? Then it tells you how those symbols are actually entered into. It enters long position when the stochastic of the CCI crosses above its 9-period moving average and exits when this happens. So again, I know that this method works well. It worked on every single instrument that we threw into that back test. But now what I would recommend that you do is learn about the indicators, take a look at where the positions came in, start small, okay? It doesn't need to be, you should never be trading so much, in my opinion, in my humble opinion, that you can't sleep at night. just shouldn't be doing it. So the other thing that I'm going to show you, and there are hundreds of them. This is one that just comes out of this platform. If I wanted to go in and add stops, I could do that. I could run the test again. It's going to tell me where to go. And I'll tell you the thing that I use in MetaStock every single day. And we do, in my opinion, and according to a lot of the people we work with, we're really good at this. And it's one of the things that makes MetaStock something that I could not trade without. So let's say, for example, I like the CCI moving average crossovers. Okay, let's say that this is the actual method that I want to trade with. Right now, I actually kind of somewhat randomly am getting a buy signal on Goldman Sachs, so I could execute that. But let's say I wanted to kind of get a list of other opportunities that might exist in the marketplace. To do that, and this is a tool I use every single day that I trade, I'm going to run a scan. Okay, so let's say that you have a method that you like. Let's say that it, just for the purpose of this demo, it's the PS. What is this? The PSCCI moving average crossover. So I'm going to go ahead, and what I'm going to do is I'm just going to do PSCCI so I can find it real quick. I'm on the system tester still, so I'm going to go to the actual scanner. Okay, and then I'm going to do PSCCI. And what I'm going to do is I'm going to actually run a scan. I'm going to say, okay, out of the stocks that I'm interested in, that could be like all the optional stocks, or it could be whatever lists that you want. It could be Indian stocks if you're in India. Out of the stocks that are there, which ones are actionable? And I love this tool. I use it every day. But what I'm going to do here is I'm going to do the CCI moving average crossover signal scan. What I could do all of the optional stocks just by clicking right there. I'm not going to do that. I could do all the ETFs if you're looking for ETFs. India. What I'm going to do just for the purpose of this is I'm going to come down to this list that we call the index constituents list. And I'm going to go to the Dow Industrials, and I'm going to select that. And go down to the S&P 500, I'm going to select that. And then just the short NASDAQ list, not the NASDAQ 100, not the whole 3,700. Okay, so out of that, let's do the, I have some other instruments that are selected that I'm mean to. I'm going to run that scan about 635 instruments. And what it's going to do is it's going to go through there, and it's going to just reject all the stocks that don't have the particular opportunity that I'm looking for. In this case, right now, in real time, it's rejecting 94% of the stocks. That means, as a trader, if I want to get all my trading done in 15 minutes before the close, when I generally do my trading, I can look at 6% of the stocks that actually have an opportunity, make a decision on whether or not I want to trade them, and move on with my day. And for me, you can do whatever kind of a scan that you want. But for me, the ability, there's so much noise in the market. For me to filter out 95% of the noise and just focus on the opportunity, that's the best tool available. And so here, if I wanted to see stocks that had a long opportunity, I'm just going to sort based on this long opportunity column. There they are, Alliant all the way down to Warner Brothers, I guess. So out of those 500 stocks, I'm maybe looking at 15 or 16. And from there, I'll be like, okay, well, these are the ones that I like. Okay, I'm not looking at all 634 though. I'm just looking at the ones that have an actual opportunity. Love it. I thought Michael says Mr. Voracious only trades about 50% of his count. I thought it was closer. Oh, yeah. And he also has some very specific position sizing rules. I don't think he'll take more than 5% of a trade at any given time. So thanks for that comment. I've been terrible at reading. I'm usually much better at looking at comments here. Don says 60 to 700 is really good. It's stochastic. A daily. We've only been playing with daily, but you can do whatever time you're on. Thanks for the question. All right. I need to wrap up here. Turn this back over. I appreciate, again, everybody for having me. Hold on. We're going to make an edit in real time on this. Okay. There we go. This year is actually the 30th year in a row that it's won best software in its price category. I love looking at kind of the surveys we get. We have so many customers that just with us for decades. The average tenure here for a MetaStock employee is like 14 years. It's a great company to work for. It's a great software to represent. I'm really proud of the fact that like we have more people in our support desk than we keep in sales and marketing put together. If you ever have a question, you can call our people. They'll answer it for you. You can chat with them online. They're all here in our office. If we have a question for them, we'd chat over the cubicle at them. I think it's a great place to work, but I also think it's a great place to be a customer. Not only is the software really, really usable and helpful, helps you identify trades, but it's backed by great people. There's many weeks where we'll get a 100% on our customer support surveys where people that have contacted support give them top ratings. So we really, really like that. So anyway, we've got two different versions of this. We've got our real-time version and our end of day. Our real-time version is $265 a month. It includes all of the methods that I showed you today. It also includes, if you're interested in news, I didn't talk about it at all today, but it includes a news platform that was initially developed by Reuters at the cost of over $1 billion. It includes all of the Reuters news. It's literally the same access to information and news that you'd get if you subscribed it as a hedge fund. And that's just included at a much more retail-friendly price point. So you can get that. You can get the news service, one of the best in the industries, up there with Bloomberg, and you can pay $265 to both our award-winning 30-year in a row software and that news service. So that's our real-time option. We also have an end of day, or what we call our DC version. Okay, and with that, it's $69. It doesn't include that same access. There's no way we'd be able to get all that access to news and information in that platform because it's actually, institutions pay much more for that for the news platform. But we'll include everything that we have today, and it's only $69 a month. What we're going to do as an offer today is we're going to do like what we call an extended trial. If you pay for a month, we'll give you the second and the third month for free. So, and that's going to include MetaStock. It's going to include data for the region of your choice. It's going to include white glove installation. This is a 2-hour block of time that we actually set you down with. You don't have to do it. Actually, one of the questions I had was like, is it that hard to install that you need to make sure a support rep talks to us? No, we want to make sure that if you want to scan, you don't have to. We want to walk you through the test. We want to walk you through the scanning. MetaStock's a huge tool. You're not going to outgrow it, but we don't want you just to pay $69 and be a customer for 3 months and leave. We want you to be one of our customers that have been with us for decades. So we'll sit you down with somebody. We'll have them walk you through the tool. It's basically a free, we call it a white glove installation session. And then we're also going to give you a home study called Unleash the Power of MetaStock. You'll have unlimited access to our support team. If you have questions, you can call them, you can send them an email, you can chat with them online. They're great. So to do that, you can go to metastock.com/tradingpubconf 3-for-1. I think they're going to put that in the chat right now. Questions, you want to get more information, you can call us 800-882-3040. You can also go to metastock.com/salescheck. Now, what you'll want to do so that you can get the second and the third months for free, you'll need to mention the conference today and the code TradingPubConf 3-for-1 if you contact our guys. But no matter what, that way you can get the extended trial. Just make sure you mention today's show. If you have questions, we're happy to help you. There you go. Anyway, that's me. metastock.com/tradingpubconf 3-for-1. So there you go. And it looks like I ended on time. That's awesome. All right. I do want to say thank you, everybody. Thanks for the questions, Dawn. Everybody, I appreciate that. I hope if I missed any, I'm sorry. Thank you, Trading Pub, for having me. Great being here. And hope to see you guys again soon. Have a great summer.